He started with just $30,000, an amount so small no one on Wall Street would have even noticed. But by the end of his journey, that small stake had ballooned into a staggering $80 million. How? No robots, no complex algorithms, no fancy, colorful indicators, just pure, raw price action, and a discipline so cold, so sharp, it could cut through steel. Now, if you're here expecting a feel-good, inspirational success story, this isn't it. This is a warning. It's a symphony of patience, self-control, and the quiet, gnawing agony of losing nights when you have to stay calm and not break your own rules. This is the story of Michael Marcus, the man Jack Schwager called the silent wizard of the markets in his legendary book, Market Wizards. He was a man with no noise, no marketing, no stage lights. He wasn't on social media flaunting his wins. He had only one thing that mattered: results. And if you believe trading is about finding that next secret to get rich fast, Marcus is about to wake you up with one of the most powerful truths ever uttered on Wall Street. You don't need to know what is going to happen next. You just need to manage your risk when it does. Think about that for a moment. How many times have you jumped into a trade just because you felt sure, absolutely convinced, that this was the one? And how many times have you refused to close a losing position, praying it would come back, only to watch it bleed out? Marcus did the exact same things, and it almost destroyed him. On Wall Street, people love to worship genius. They love the stories of brilliant minds who seemingly cracked the code, but Marcus wasn't a genius. He was just a relentless man who was crushed and then reborn in the fires of loss. He began like so many of us, confident, eager, and convinced he had figured out the market, but after a few years of trying, his account was nearly wiped out. Again and again, he watched his $30,000 shrink to $10,000, then to a painful $3,000. It got so bad that at one point he had to borrow money from friends just to get back in the game. And it was during those sleepless nights, staring at charts until his eyes burned, that Marcus realized the most painful truth of all. It wasn't that he lacked knowledge. It wasn't that he misunderstood the charts. It was that he lacked the discipline to survive. Survival, he would later say, is more important than victory. That sentence wasn't just a catchy quote. It became the bedrock, the absolute foundation of his entire trading philosophy. The market doesn't care how smart you are. It doesn't care how many indicators you cram onto your screen or how perfect your analysis looks on paper. The market only cares about one thing: your discipline when everything goes wrong. Marcus once admitted, "I was right so many times, but every time I was wrong, I lost everything, because I couldn't admit that I was wrong." He called it the most dangerous disease in trading: ego. Your ego is what makes you revenge trade after a loss. Your ego is what keeps you from cutting your losses small. And ultimately, your ego is what destroys the account you spent years trying to build. Everything changed for Marcus when he met a mentor, a seasoned trader who saw what he couldn't see in himself. This mentor told him something so simple yet so profound. "Michael, you don't have to win every trade. You just have to avoid losing too much on the bad ones." That was the light bulb moment. That was when Marcus finally understood. Trading isn't about predicting the future. It's about managing probabilities long enough to stay alive until the right opportunity finally comes along. From that day forward, he rewrote his rules. No more trying to catch tops and bottoms. No more emotional, gut-feeling trades. No more believing every single position was the big one. Instead, he focused on just three things: the major overarching trend, the key price zones that actually matter, and a risk-to-reward ratio that was heavily tilted in his favor. You might be asking yourself, why would a man who turned $30,000 into $80 million care so much about losing just 1 or 2% on a single trade? Marcus's answer was cold, logical, and brutally honest. If I lose 50% of my capital, I need to make 100% just to break even. But if I only lose 2%, I can fight again tomorrow. That's not the mindset of a gambler. That is the mindset of a professional risk manager disguised as a trader. On Wall Street, where billions of dollars move every single day, the smartest people in the room understand one truth. Survival is the first victory. Marcus never aimed to be the best trader. He aimed to be the last one standing. And that's exactly why he outlasted almost everyone else. After years of painful losses and hard-earned lessons, Marcus began to see the market differently. He no longer saw charts as just patterns of price. He saw them as psychological battles between buyers and sellers. When price was rising, he'd ask himself, who's in control here? Are the buyers still strong? Is this a genuine continuation, or is this a trap? When the price was falling, he didn't rush to check his RSI or MACD indicators. He looked at the behavior of the candles themselves. He was reading the story of money flow written in the language of price. Marcus realized something critical. Price is the purest language of human behavior. If you can read that, you don't need any indicators. But knowing all this is one thing. Acting on it is another. This is where the discipline of a Wall Street soldier comes in. No one ever saw him showing off his profits. No one saw him doing interviews on camera. He worked in the shadows. But he had a ritual. Every single day he wrote in his trading journal. He didn't just write down his entries and exits. He wrote down his emotions. Was I patient enough today? Did I follow my rules to the letter? Did I move my stop-loss out of fear or hope? For Marcus, the enemy wasn't the market. The real enemy was the undisciplined version of himself from yesterday. So, let me ask you the questions Marcus would want you to ask yourself. If you lose 5% of your account today, what will you do tomorrow? If price moves hard against you, will you follow your stop-loss, or will you follow your pride? And if the market goes sideways for days, will you have the patience to wait for a real opportunity, or will you click the mouse just to feel alive? Michael Marcus won't answer those questions for you, but if you don't answer them for yourself, the market will, by taking your money. He wasn't the flashiest or most brilliant trader on Wall Street. He was simply the man who learned the hardest lesson of all, humility. In a world where most traders die of arrogance, Marcus chose to surrender his ego to survive, and that simple choice made him a legend. From $30,000 to $80 million, not because he had a secret formula, but because he understood something almost no one truly does. Big wins are born from the ability to accept small losses. Marcus wasn't just being patient for the sake of it. He was building a mental fortress, a system that allowed him to turn tiny advantages into a massive fortune. Forget the fairy tales. This is the real blueprint. Let's start with Principle 1, the power of asymmetry. Marcus understood something fundamental that most traders completely miss. You don't need to be right all the time. You just need to make sure that when you are right, you make a lot more than you lose when you're wrong. He called it the math of survival. Think about it. If you risk $1 to make 3, you can be wrong twice, win just once, and still come out ahead. This simple ratio was his shield and his sword. Before placing any trade, Marcus asked himself one critical question. Is the potential reward worth the risk I am taking? If the answer wasn't a crystal clear yes, he wouldn't touch it. No excitement, no second guessing, no maybe this time. This is exactly where amateur traders fall apart. They chase the action, the thrill of being in the market. They want to trade, not necessarily to win. Marcus flipped that script entirely. He could sit on his hands for weeks, waiting patiently for that one perfect moment when the risk-to-reward ratio was overwhelmingly in his favor. It was like a sniper waiting for the perfect shot. When that moment arrived, he acted with precision, not hesitation. He famously said, "Most traders lose because they trade too much, not because they know too little." That's the secret nobody wants to hear because it sounds boring. But asymmetry isn't about luck. It's about being incredibly selective. The fewer trades you take, the more control you have over your risk. And that control, compounded over years, is what builds real wealth. Now for principle 2, alignment with the market, not against it. In his early days, Marcus, like many traders, tried to outsmart the market. He was constantly hunting for reversals, trying to perfectly call the tops and bottoms. Every time he got it right, his ego swelled. But every time he failed, his account took a serious hit. Then one day, staring at a long-term chart, he had a realization that was almost embarrassing in its simplicity. Every single major win he'd ever had came from trading with the trend, not fighting it. That realization was a game changer. He stopped trying to predict the future and started trying to align with the present. Instead of asking, "Where will the market turn around?" he started asking, "Who's in control right now, the buyers or the sellers?" This single mental shift transformed his trading from a fragile guessing game into a fluid, adaptive process. He became a trend follower, not because it was a popular strategy, but because he learned that the market rewards humility, not cleverness. He often said, "The trend is your friend only if you have the discipline to let it stay your friend." Most traders can't do this. They get nervous and take small profits, afraid the market will reverse. They cut their winning trades short, but let their losing trades run, hoping they'll turn around. Marcus did the complete opposite. He gave his winners room to run and mercilessly cut his losers short. This is a total inversion of average human behavior. He understood that following the market isn't a sign of weakness. It's a sign of respect for the collective intelligence of billions of dollars flowing through the system. You don't fight a tidal wave, you ride it. This brings us to principle 3, and it might be the most important one of all, emotional neutrality. The rarest and most powerful skill Marcus possessed wasn't his technical analysis, it was his emotional control. For him, trading wasn't a roller coaster of excitement and fear. It was a test of mental balance. He treated both huge profits and painful losses as simple data points, not personal dramas. In interviews, Marcus often described his mental state during his biggest trades as detached. He said, "If I feel too happy or too afraid, I know I'm already in danger." Why? Because emotion leads to inconsistency, and inconsistency absolutely destroys a trader's edge over the long run. He learned this lesson the hard way, not from reading a book, but from experiencing financial ruin firsthand. He never forgot the pain of breaking his own rules after a losing streak, the desperate rush to double down, to make it all back, and the illusion of control that always ends in chaos. So he built a psychological firewall. He created a strict routine. Every single morning, before the markets even opened, he would meditate on 2 simple ideas. First, I don't know what will happen today. And second, but I know exactly how I will respond. This powerful mindset turned the unpredictable chaos of the markets into a structured, manageable process. Marcus didn't need to predict the future. He just needed to respond to the present with unshakable discipline. Beyond these principles, Marcus approached trading in a way that set him apart. While others saw it as a daily gamble, he treated it as a business. Every trade was just a line item on a financial statement. Risk was a necessary business expense. Profit was revenue. A series of losses or a drawdown was simply part of the operational cost of being in the market. He wasn't desperately trying to win the next trade. He was strategically trying to protect the long-term health of his business. This is why he never let his emotions dictate his position size. He only increased his size when his system was performing well and he was in a state of cold, consistent execution. He scaled up like a professional money manager, not like a gambler chasing an adrenaline high. He used to tell younger traders, if you want to make big money, first learn how not to lose small money. That isn't just a humble-sounding quote. That is the core philosophy of how professionals think and operate. The incredible success of Michael Marcus wasn't the result of one single brilliant insight or a secret formula. It was the result of compounding small, correct behaviors, executed flawlessly thousands upon thousands of times. He understood that trading success is not a singular event. It's a habit loop of disciplined decisions. He didn't celebrate his wins, he celebrated his execution. Every time he honored his stop-loss, every time he ignored the market noise, every time he walked away from a tempting setup that didn't meet his strict criteria, he was strengthening the mental pathways of mastery. By the time he had turned his initial $30,000 into $80 million, the money itself was almost a side effect. He wasn't trading to prove a point or to get rich quick. He was trading as a practice, a daily exercise in self-control. So, what's the ultimate lesson for every one of us? The story of Michael Marcus isn't a Wall Street fairy tale. It's a practical manual on mastering human behavior. The real battle in trading isn't between bulls and bears. It's the internal battle between discipline and emotion, between patience and ego, between following a process and giving in to impulse. Most people lose money in the markets because they're desperately trying to master the market. Michael Marcus won because he first focused on mastering himself. He didn't need certainty, he just needed clarity in his own rules. He didn't chase money. He chased consistency in his actions, and that, in the long history of Wall Street, is why his name still echoes among the true professionals. As he himself said, the market rewards those who stay humble long enough to be. But if you're searching for the Michael Marcus candlestick pattern, you can stop looking. He never invented one. He didn't need to. What made him extraordinary wasn't the pattern he used, but where and when he used it. While the crowd frantically searched for magic indicators and secret formulas, Marcus quietly mastered the oldest truth of the market. That price itself is the purest form of information. His entire trading philosophy revolved around one powerful principle: follow the path of least resistance. In other words, follow the flow of big money. He wasn't a fortune teller. He wasn't interested in picking tops or bottoms, a game that bankrupts many. His goal was simpler and far more effective: to confirm strength. When the market showed a clear direction, Marcus aligned himself with it, like a sailor catching a strong wind. How did he do it? He read the market structure. A rising structure with higher highs and higher lows told him the bulls were in control. A falling structure with lower highs and lower lows signaled that the bears were ruling the day. This wasn't complicated, but it was fundamental. From there, he waited. He didn't wait for predictions to come true. He waited for confirmation. The pullback became his hunting ground. Imagine a strong uptrend. Price doesn't just go straight up, right? It breathes. It pulls back. When price returned to what he called a value zone, like a major moving average, a retest of a broken resistance now acting as support or the slope of the main trend line, Marcus watched the market reaction like a predator waiting for one clean shot. And what was he looking for? A signal, a rejection candle, a pin bar, or an engulfing pattern at that exact point wasn't just a random flicker on the screen. To Marcus, it was a message that the dominant force, the big money that was driving the trend, was ready to move again. It was the market saying, all right, the break is over. Time to get back to business. Let's talk about the pin bar. To Marcus, this was more than just a candle with a long wick. It was psychology printed on a chart. Think about what that long tail really represents. It's proof of a failed attempt by one side of the market, the losing side pushed with conviction, trying to reverse the trend, only to be crushed and forced to retreat by a stronger opposing force. Marcus called it a mirror of rejection. When he saw a strong pin bar forming at a key level, that support, that moving average, that trend line, he didn't see it as a coincidence. He saw it as the market screaming, "This price is not accepted." And when the market rejects a price, Marcus knew exactly where he wanted to be, on the opposite side of that rejection. He sided with the victors. Then there's the engulfing pattern. This wasn't about aesthetics for him. It was a raw display of power-shifting hands. When one candle completely consumed the body of the previous one, Marcus saw dominance. He didn't care how perfect the formation looked. What mattered, again, was the context where it appeared. Imagine a long, tired downtrend. Everyone is bearish, emotionally exhausted. Suddenly, a massive, bullish, engulfing candle appears at a key support level. The crowd sees a simple reversal pattern. Marcus saw something deeper: trapped traders. All the people who just sold at the bottom were now caught. Their panic to cover their positions would fuel the new move up. He saw trapped money, and to a trader, that's profit potential. But his favorite battlefield, his signature play, was the false breakout. He called it the shark trap. Now this is where he truly separated himself from the amateur crowd. Most traders get excited by a breakout. They see price smashing through a key resistance level, and they jump in, fearing they'll miss the move. Marcus had zero interest in that first breakout. He wanted to see what happened after it failed. He would watch patiently as price violently pierced through a level, pulling in all the eager breakout traders with the promise of easy money. He knew that the first move often belongs to the impatient, not the intelligent. He waited, and then it happened. The move would run out of steam, and price would snap back inside the previous range. Closing back below the line, it just broke. This was his signal. The trap was set, and it had been sprung. While the trapped breakout traders were screaming for the trend to continue, paralyzed by hope, Marcus quietly entered a trade in the opposite direction. He was siding with the sharks, who had just trapped the minnows. His edge wasn't predicting the breakout, it was profiting from its failure. His entire approach was built on this kind of elegant simplicity, but it was executed with surgical precision. Every entry was a test of discipline, not a prediction. Every exit was a lesson in humility, not greed. He understood a profound truth that many traders miss. Trading is not about finding patterns, it's about understanding the behavior behind them. When the market rejected a price, he followed the rejection. When the market trapped traders, he joined the trapper. When the market flowed in a clear direction, he flowed with it. He wasn't fighting the market, he was in harmony with it. Michael Marcus turned simple price action into something more than just a strategy. He turned it into an art form, an art of timing, patience, and emotional control. It was never about the candles themselves. It was about reading the story they told, the story of fear, greed, hope, and failure. And that, in the end, is why his chart looked like chaos to others, but was the picture of clarity to him. Thank you so much for watching. If you found this breakdown valuable and want to learn more about the mindset of legendary traders, make sure to hit that like button and subscribe to the channel. Let me know in the comments which trader's mindset you'd like me to explore next. See you in the next video.